Okay, here we are. We're starting on session or lesson 3, and we're talking about adjustments now. But the first thing they're asking about is cash versus accrual basis. Cash is when you recognize revenues when you get the money, not when it's been earned, but when you receive the actual cash, and you recognize expenses when you pay the cash out. So it's truly a cash basis. Whatever you have in your checking account essentially is kind of a running balance of how the business is doing to a certain extent. It's not very accurate, but that's kind of the way that a cash basis runs. So if you look at this and they first ask you, you have been house sitting, and you usually get cash when you're done, but some of your customers ask you to send them bills. So right now you are sitting in-house, and you have collected $600, but have sent bills out for $1,400. So how much revenue do you recognize under the cash basis? Well, if it's only being recognized, if your revenue is only being recognized by what you have in hand, or the cash that's came in, that would be $600, right? Because that's all the money you have. On the accrual basis, it's a little bit different. You have $600, but you have also performed the services of $1,400. So you would add the two together and come up with your accrual basis amount. That's because you recognize revenue when it is earned, not when you receive the money. So, and then they have a really interesting little question for you to answer on that. And I'll let you merit that out by yourself, okay? So you can kind of figure out which one works the best and tells you the best answer. So number 2 is pretty much the same type of question. It's a database, only we're looking at a firm that is a law firm that uses a client database, and she paid $5,000 for a computer. She paid cash for it. So what would show up on the books? Would there be any difference between the cash and the accrual basis? Well, no, because it's an expense, right? Under the cash basis, we paid cash for it, so it's a valid expense. Under an accrual system, it's a valid expense because we paid cash, but we bought it. We accepted. It hasn't been incurred. If you incur an expense, whether you pay for it or not, it should be recognized at the time. If Michelle, is that her name? Yeah, if Michelle had charged this on her charge card and wouldn't pay for it for another year, under the accrual system, she would still recognize it as an expense. There's a question that asks you which is more realistic. So kind of figure that one out. Number 3, you don't do a dance. Number 4, we're looking at, we paid a full year's rent. And we are trying to figure out, first of all, how much rent did we pay for the full year? So that's $4,200, right? And we are now in, where are we? We are in September. So 9 months have gone by. And they want us they ask us what the 2 account balances are for this situation. So prepaid rent started out at $4,200, and each month we paid rent. So looking at it, if you take, we've paid 9 months of rent, $4,200 times 9 divided by 12, or 9/12, what is that amount? How much is left? We've actually paid out how much money here? Do the multiplication, and how much money have you paid out for that? You've actually paid out $3,150. So that kind of tells you both sides of it. Your rent expense is going to be for that 9 months, and what's left, if you take 4,200 minus the 3,150, is what is going to be left in this account. So this is what is in the rental expense, or the rent expense, and this is what's left in the prepaid account. And basically you'll probably be doing this every month, but this kind of shows you, and it would be easier if we did this in a T account, I think. So that's number 4. Clear as mud, right? We don't do number 5. Again, a doobie dance. Number 6 looks at actually the numbers in number 5, but you don't need to do number 5 to have the numbers. So what they're asking you for in number 6 is prepare the journal entry for the April 1st payment. And what did we do with this? It says on April 1st we prepaid 6 months of rent. Well, we know we're going to hit credit, right? Cash for credit of $4,800, and that's going to create that prepaid asset here. So on April 30th, we are going to pay our first. Oh, that's an odd way of doing it. We are going to accrue our first rental payment, or our first adjustment for the rent, and kind of looks like it's 6 months. So for each month we're going to divide that $4,800 by 6, and that gives us $800 for each month. So each month that goes by, because we've already paid this, we are going to remove $800 out of the prepaid, and we're going to put it into the rent expense as an adjustment to be recording the expense as it's incurred. So, and then they ask us, okay, make T accounts for this, and make it, and I've left the balances here so that you can kind of understand, or give you a check figure. Well, this I recorded was $800, right? So I credited rent. This started out at $4,800. So $4,800 was our initial entry. We debited it on April 30th for $800, and we have a balance left of $4,000. In the rent, we now have a balance of $800 rent expense. So that will seesaw its way out until it's all used up, and then you will probably rent it again and record that as a prepaid. And we have number 7. And number 7 is depreciation. And depreciation is a wonderful thing, and this one's a fairly easy depreciation schedule. They bought computers for $51,300. They're going to last for 4 years. It's straight line depreciation, which means you're just going to divide that $51,300 by 4 and allocate so much of the cost each year. Because you're using the computers over a 4-year period of time, you do not want to recognize the initial amount. You want to spread that out over the 4 years to recognize the use of that asset. So your depreciation expense is going to be $12,825 a year overall. And if you divide that again by 12 to find your monthly, you'll come up with $1,069, and they have rounded that. Okay, so you need to show me how that's calculated. Now, what are the requirements of this? That's kind of the overview. The requirements are to post the purchase on December 1st and the depreciation on December 31st. Well, okay, so I bought equipment, so I'm going to increase this, right? I'm going to debit. I'm on the left-hand side for $51,300. And that records my computer equipment. And now I come to the adjustment period time, and I need to record the depreciation expense. So I debit here, and we use an account that's called accumulated depreciation, which is called a contra account, which is an adjustment account used against a permanent account, such as a balance sheet account, asset. Oh, you can also do it for liabilities, notes payable, or bonds payable. But let's just concentrate on this. So now, what are my balances in each one of these? You'll notice I did not touch the cost here. That's because we work on the cost principle. The cost never goes down. What we paid for it becomes its value. That does not get decreased. What gets increased and decreased, what increases and decreases it, is this accumulated depreciation. So now I've incurred the expense. My balance in this account is 1069, and my balance, I did that backwards, guys, and you let me do it. I should have confused you. Okay, so this should be 1069, and my balance is here. Don't pay attention to your teacher. So you debit the expense, and you credit the accumulated depreciation. So now you have an expense of 1069 to be recorded, or as an adjustment, and you have a credit balance here in your accumulated depreciation. Now, this is how this works on the balance sheet. It asks you, what is the book value? Well, we started with, I'm not quite sure how that is set up. Here it is. So we started with 51,300, correct? We have depreciated out at this time 1069, which is showing in our accumulated depreciation. On the balance sheet, these two, you would have the equipment, you would have the accumulated depreciation, and the net book value then is the cost, or the value, however you want to look at that, minus accumulated depreciation. So the book value, for if you decide to sell it, for recording purposes, would be $50,231. We'll do a couple more of those later on. And this wraps up this part of 3.1, and then we're going to have one other part that's going to look at worksheets and using these adjustments on the worksheet. So hang on. Got another one